Welcome back. Oil in focus. Prices edging higher over tensions with Iran. On Sunday Morning Futures yesterday, I spoke with Congressman Mac Thornberry on Foreign Affairs Committee about potential disruption in the oil market due to this conflict. Do you expect any disruption in terms of the oil markets, given the Straits of Hormuz and what the Iranians might be able to do there?
Well, there could be. We saw this past week 4 tankers receive some sort of attack or explosion that did not sink them, but it may have been a warning sign that Iran could do worse. And remember, the context here is Iran's economy is in real trouble. And oil is a major factor in their economy. So all of this could be part of their plan to increase the price of oil, help their oil economy, and cause some disruption throughout the Persian Gulf.
That was Mac Thornberry on the Foreign Affairs Committee in the House. As OPEC says, it will keep production cuts where they are. Joining us right now is OPIS Energy Analysis from Global Head, Tom Kloza. Tom, great to see you. Thanks so much for joining us. You saw the news last week in terms of Iran and what they are trying to do, undermine the United States. Do you expect an impact to the oil markets?
I think it'll be very, very touch and go for the next 100 days or so. I mean, even if Iran continues to pump and sort of leak some oil under the guise of exports that are being closely watched by the U.S., we're going to see world oil demand outpace world oil supply for the next 100 days by about 1 million barrels a day. So that makes the market tight. It's not particularly tight now. It won't be very tight a year from now or next winter, but the next 100 days, really anything goes. And you've got this market mentality now where it could move $2 or $3 or $4 a barrel on a tweet, a drone, or a Houthi frogman. So we haven't seen this before. This is new.
Tom, Jackie D'Angelo, it's good to see you. You know, I'm looking at this price, just a little bit under 63, and I'm thinking to myself, trouble in Venezuela, so much pressure on Iran right now, and Iran's causing a lot of trouble, yet the price isn't spiking the way you would expect to see it spike, and as it has in history. I pin that to the fact that we're producing here in the United States more than 12 million barrels a day.
Well, I think you've got a point, but here's the point I would make, that the WTI price in Cushing is about 63, 63.50. But the price of coastal oil, whether it's WTI, whether it's Brent, whether it's Louisiana Light Sweet or Alaska North Slope oil, is going to be $70, $71, $72 a barrel. So what's the real price? Probably the price on the coast. So we're already seeing most U.S. refineries and refineries that sort of serve the world paying something in the 70s. And if you get some real skirmishes in the Middle East, you can have a cup of coffee at $80 a barrel or so. It could happen more in the next 100 days than in the 100 days after that.
Tom, it's Dagan McDowell. How quickly, though, can the shale producers ramp up production even beyond the levels we're seeing now? Because you were talking about maybe later this year, for example. We had that conversation when the United States got rid of the waivers on exporting oil for a number of nations exporting oil out of Iran. The question was, why now? Couldn't they have waited until the end of the year? Does the fourth quarter look better in terms of our production here?
It looks better in terms of our production. Quite frankly, I think they could raise production very quickly by 1 million barrels a day. The problem is there are no pipelines to take away that additional oil. That happens in the last 60 days of the year when Giants fans and Cowboys fans are getting their hearts broken by other things. So we've got the oil. We've got the oil that's ready to come on. We don't have the pipelines to take it to the coast where it can go to the export market.
All right, we will leave it there. Tom, great to see you. Thanks so much.
Nice to see you.
Tom Kloza joining us there on oil.